Okay, there we go. Hey, again, I want to welcome everybody. Thank you very much for being here. For those that don't know, my name is Rick. Glad to see everyone here. Thanks, Ed, for inviting me here. Today we're going to look at building three different scans, two of which my choice, and then I had a request for one. So I'm going to help you build that one right there. What I've got is two scans that's looking for shorts, and then the request will be looking for a long type trade. I hope that's all right with everybody. If you have any questions during the building of these, please let me know. You're more than welcome to build it right along with me. If I go too fast, and we're going to try to keep this in an hour, so if we have to kind of speed it up or something, keep in mind this will be recorded. And another way to build this along with me, if you can't, if I go too fast, is simply write it down and then go back and build it. And then after the class here, after my webinar right here, Ed will be here and he can certainly help you and walk you through each and every little step, okay? So it won't be a problem. We'll get you squared away. So I'm curious, how many people here do not have the scanner, the LTA scanner? Maybe everybody here has it, in which case I'll go about this completely different. But anyone here not have it? I see you don't have it. Anyone else? Okay, everyone has it. 105 people have it. Okay. There we go. A couple people don't. All right. Well, just a quick thing about the scanner I just want to share with you. And for those that do have the scanner, you know that it's probably to me, it's the protein in my trading. I mean, it's what gives me the gas to get there. Hey, Malcolm. I know Malcolm uses it and quite successful with it. So there's quite a few other people. Malcolm is pretty voiceful about it, but thanks, Malcolm. Okay, so let's talk about some shorting. Okay, let me make this stay on top, and I'm going to make this stay on top. And we're first going to look at some shorting, and then we'll look at creating a long one, and I'm going to walk through creating these as well, okay? So I know we're talking about shorting and we see some green arrows here. This one probably makes more sense because you've seen red arrows. Well, we're going to start with the blue ice failure first. Now on the in the scanner there is a couple quick clicks and you can get to the blue ice failure, but through the magic of new alerts and being able to combine them in different things, honestly I enjoy building my own. There's nothing wrong with the one that's there, but this one here, it actually offers me a little more flexibility, and I really do like it the way it looks. And let's go down and find one like NVR. Let's take a look at NVR, and you can see that blue ice failure setting up right here. I don't know if there's going to be any more because we're pushing up. Oh, there's CLF. Let's look at CLF. CLF, here's a blue ice failure. For those that aren't familiar with the blue ice failure, it's basically taking the 50 period moving average. We color it blue. There we get the blue ice. What we're looking for is a chart that comes down to the 50 or fails the 50, comes back up, and then fails to the downside. This would have been a blue ice failure just through the 50. Here we came up. We came back, but I don't know that we came up close enough to make that worth the trade. That might have been a trade in a different type of scan here. And then you see we went down. Of course, we found buyers here. So this is the type of chart that it looks for right here. And we'll kind of work with that. Let's see, Stan is asking, there is already a blue ice failure called bear blue ice failure. How is this one different? This one, well, let me, and Stan, here's the thing. I'm not going to compare the two, okay? I'm going to show you how to make this one. I like this one because it offers just a tiny bit more flexibility, and I like that, all right? So let's go through this, and I'll show you, and maybe it'll make sense as we go through it. So we're going to go into the properties, and it's just three scans. Now, and Stan, to what you asked, what's the difference? The other one is it's preset for a couple different things, and there's like 3 of them in there or something like that, 3 or 4 of them in there. So which one do you use? Well, I used to use them all and just create an OR scenario. Well, what happened is Ed came out with this spread of moving averages, and I just think that's about the neatest thing since sliced bread. I really love this. And then when we make the long trade, the 3/8 trap, I'm going to show you another one that he's recently made that I'm just in love with. So let me share this with you, okay? And what we're going to do is create a trap. Now, you guys are probably thinking the 3/8 trap. Well, that's not it. All the 3/8 trap is price trapped between one moving average and another moving average. So let's get away from the 3/8 trap and let's think about a trap using other moving averages, okay? So what we're going to do is we're going to use the 50 period moving average. So we want to set it up so you have this alert, so you can go get this alert, and then in the parameters we want to click on simple right here versus any other moving average type. Click on simple. We want it on the close. And what moving average do we want? We want the 50 period moving average right here. Then what we're going to do is come down, and that's for the shorter term. See right there, shorter term moving average. And then what we're going to do is come down to the longer moving average, and that also is going to be the simple. Again on the close, but that one's going to be the 200 period moving average. So I want to stop right here for a second. I'm going to close that. I'm going to change this chart to this chart right here. And this is what I'm looking for. I'm looking for price to be above the 200, and I like the idea of failing the 50 and then having a target direction, not necessarily a target, but a target direction back to the 200 period moving average. I like that idea. I like to trade that. I enjoy the profits from here to here. Now, I'm not saying that the price can't go any lower. It certainly can. But we have a specific trade here that we're going to start with, okay? So, let's go back into here, and go to properties. So here we've got that user trap. Again, it's the simple close 50, and then it's the simple close 200, okay? Now what we're going to do is we're going to spread those moving averages out because I don't want these two moving averages close together. I want there to be some space here for price to fall in the direction of the 200. So we're going to spread that out. So if somebody wanted to go get this, if you're building this as we go, then go find spread of moving of averages. You can just type in spread keyword here. And then what are we spreading out? We're spreading out this trap, right? So I want the simple, the close 50 here. So this is for the shorter term moving average. Just like we created up here, we're going to use the same thing. And then we're going to come down and for the lower number, or for for our purposes, for the moving average underneath the 50, which we want the 200, and then we're just going to make that the simple, the close, and the 200. Okay? So all we've done is create a trap so far. But now what we're doing is saying we want it spread. We want it widened out. Because the wider it gets, the more likely price tries to connect with it. If price gets too far away from a major moving average, price likes to come back. Now, I don't know. I don't think there's any like magic number, a magic percent. I really don't. I've never found one. 10%. We use 10% because if there's not 10% in there, then I'm not interested in the trade. That's not enough money. It's not worthwhile. The reward is not worth it. So there has to be 10% reward in there. And that's the reason we use 10%. You could put more in there if you want. If you want to see this 20%, by golly, you can do that perfectly fine. I've just, for years, have always used this 10%. So by spreading this out, here's what we're getting. Well, now the problem is, what happens if price is down here? Sometimes you get alerts, the blue ice failure alerts, where we've come below the 50 so much, but yet you still have maybe 10% of the 200, but you're so far below the 50, you're actually a little nervous, and I don't want to trade that short. So what we've done, or what Ed has done, is he has added an alert called near below average. Okay, near below average. So let's click on that. Click on that. There we go. My computer's a little slow this morning. We're going to open that up a little. So what I want this to do is be close to the 50. I don't want it to be, way down here. I want it to be up here yet. So what I'm asking the 50 period moving average to do, simple. So we're going to go simple. Again, we're going to work with the close, and then there's the 50 period moving average, okay? And I'm willing to accept 5%. Now you can change this to whatever you like. Your maximum, your price can be a maximum of 2% below the 50 if you want. That would be perfectly fine. It's, that's the neat thing about the scanner. You can truly tailor it to yourself, all right? But I just have 5% in there. And then I'm just using my watch list. You can use any watch list that's already pre-canned, or you can make your own watch list. I make my own, which is, by the way, there's nothing fancy about my watch list. It's a combination of the S&P, the CBOE 400, 400. I come in there and I make sure that I have all the Q components in there. Sometimes they might not be in there, things like that. But that's all my watch list. It's just combining all those. Okay, so I come up with 57 possibilities here. So I'm going to click on cancel. I'm not going to click on OK. If somebody just built this, you need to name it and you need to click on OK. I'm not going to click on OK, just click cancel so my list stays here. So I can see that OSTK has popped up. So let's go take a look at that. And there it is right there. It's giving me what I want. Whoops, let's move this down right here. It's giving me what I want. We've got 13% between the 50 and the 200, and we are down less than 5% on today's candle. Now, there's nothing wrong with shorting that. Nothing at all. I tend to look for something a little wider that just looks wider. But, hey, there's 8% in there that's got some, that has somebody's name on it. And but it's set up exactly like we want. Here we've rallied up to the 50, we failed, and we have that 10% down to the 200, and again, price is within 5% of that 50 period moving average. I see Telray is showing up. Let's look at Telray. Look at Telray here. So here we've got failing of the 50 period moving average. We've got to the 200, 52% to the 200. From there, you can do any other chart work that you might want to do. You know, the fact we're under the trend line, Trendicator here. You might look at price action, you know, other things to make your entry, but it's giving us that chart right there. We'll look at one more, HEXO. Look at HEXO. And I'm not cherry picking these. I mean, they're just, you know, there they are right there. So nice doji continuation pattern setting up here on this one. Because you're seeing some green arrows, let me share with you what that's all about. I'm going to go back into the properties real quick, and I just want to point out that I have new day high also checked on this. Okay, so it's going to read things that meet our criteria, but they're also making a new day high. And let's go take a look at some of those. That's not it. There it is. So you can see that it meets our criteria, but we're moving up. For those maybe interested, this is a pretty good chart strategy for going long when we start reversing back up and possibly getting back to that 50 period moving average. See how that might work? Let's look at keys. Look at keys right there. Now, while keys meets our blue ice failure strategy, it does. While it meets it, here we are, well, from where it is right now, there's the 50, and where it is right now is 3.62%. So it's well within our 5% of the 50 period moving average. And the 200, you can see, is almost 19%. All right, almost 19%. But if somebody wanted to take a look at this and just trade this chart and trade, I mean, if you, I don't know why you would want to, but you could. This could be one of those little tools where you could play both long and short between the 50 and the 200 period moving average here. So you could do that and trade this up to the 50. And of course, you could also be looking for possible breakout. Now, if you don't want the green arrows, that's really simple. All you have to do is take the new day high out and only look for new day lows. You can also put a black candle in here if you want. I just chose to keep this way so I could show the possibilities that you could see here. Another nice little thing why I like to have this in here is I use the scanner a lot as a kind of a market breadth type of thing. And what I mean by that is if the green arrows started jamming, I mean if a bunch of stocks that met this, well, bunch, if there are 54 possibilities here. So if the majority of that 54 started a bunch of green arrows, that would make me rethink my longs. I'm sorry, rethink my shorts. If I start seeing a bunch of red arrows, that might make me rethink any longs that I have, because the scanner will tell you which direction the force of the market is. Only within the scan you have, though. Keep that in mind. But it will share with you the force. I mean, you know, we can see right now, anyone might be a little skeptical going short right now. Or this could mean that we're approaching a possible short setup. What if the Qs came up to a blue ice failure here again. So that's what we're approaching here. So, and again, there's no guarantee it's going to fail. I'm just simply pointing out what the green arrows can tell you in a case like this. Okay, Roger, so did I answer your question? Cool. Are there any questions about this? Any questions about the blue ice failure, setting up the scan? And if not, we're going to look at another short using the 1750 here. Any questions? Questions at all? Going once, going twice. I'll hold out the third in case there's a question before the chart show is over here, okay? So we'll hold on to that thought. All right, so what I want to do is let's switch places with this. And this is the 1750 short. So let's go up here and look at APHA. All right. Look, charts move like this, okay? They move like this all the time. They're in constant movement, whether they're moving up or whether they're moving down. It doesn't matter. They are in constant movement. You know, this is how you hear a lot of talk about channels like this. You know, prices at the lower end of the channel, that might be a buy, or prices at the top end of the channel, and that might be a close that long trade you are in or go short. Now, I use a lot of moving averages because there's a lot there. The moving averages to me is just a moving trend. It's a real live trend that moves with price. Okay, I'm not against drawing trend lines. I'm all for drawing trend lines. I think everybody should draw trend lines. The thing about any kind of scanning mechanism, and while there are other scanners out there, there is not a single one that can use their scanner based on a static trend line. You can't do that. You can't write that kind of code. But you can write code that utilizes moving averages. The blue ice failure is a perfect example of that. Well, what if we did the same thing for charts that are up high and fail, say, the 17, and then they want to come back to the 50? Well, let's start with the 50. Why the 50? The 50 period moving average is one of the most, I would say it's one of the top 3 most used moving averages in the stock market. I can't say whether it's number 1. I have no clue. But I can say, and I think I am correct, and I think the majority of people would agree with me, that it's one of the 3. The 3 being the 50, the 200, and I'm going to say the 20. That might be the one that I might get most arguments with. But I think the 20 is probably one of the top 3. But we're going to use the 50 here, okay? Because what we're going to do is look for charts that have been trending, nice, and all of a sudden, for whatever reason, they're done. They need a pullback. They need a rest. They need to come back and get gassed up again. They need to come back here and eat a burger and fries. I don't know. You know, for whatever reason, price pulls back into that 50 period moving average. Well, since we use the Trendicator, which is a 17 EMA, I just built this for the Trendicator. So all I'm looking for is the exact same thing we did with the 50 and the 200, the blue ice failure. We could call this the Trendicator failure if we wanted to. And so we've done the exact same thing. But what we've done here is we have simply replaced the 50 period moving average with the 17, and we replace the 200 moving average with the 50 period moving average. Now see, this is the kind of chart that might get me interested in a short from the 17 down to the 50 period moving average here. What is this? Let's move this down a little bit. There we go. And that's about a 9% profit target, that, which I would bet most people would be just tickled pink with a 9% short here. From there, we can look at, and this is true with any scan, anything you look at it, you've got to diagnose your candlestick signals. So here I see a Oreo cookie setup. I see a nice little negative bar here, definitely in a little bit of a downtrend. I see the buyers are trying to hold it up, but I see today the sellers are not letting the buyers do this. So this might be, I might look at this chart for that short to the downside. Let's see, is there any others here? TPR. Let's look at TPR. Look at TPR there. Perhaps that's a short for somebody. And again, it's doing what we have asked it to do. I want it to fail the 17, and it peaked its little nose right through there. And here we are with 11.25% down to that 50 period moving average. Again, it's exactly like the blue ice failure. The only difference is we're going to change a few numbers around. So here's where a light bulb just might have went off into a few people's mind up here. This is, for me, this is the time when, oh my gosh, my head is exploding with ideas. So maybe this just happened, okay? So all we've done here, we're using the exponential, the close, the 17. You can change this to whatever you want. We want, our target direction is the 50 period moving average. So simple, close 50, just like that. We're going to spread those moving averages out. Again, exponential. We're taking our fast moving average, the 17, and our slow moving average, which is the 50, and we're going to spread it by 10%. 10%. Now, we want price to be closer to the 17 than the 50. For this one, I chose the 3 instead of the 5 because generally there's not that many that give you too much percentage down here. So I'm going with the 3%. Again, you can adjust these how you see fit to meet your trading. Okay, so I'm going to run through this one more time. The top one, the 17, exponential, close 17. The 50 here, simple, close 50. We're going to spread the moving averages out. We're going to spread the 17 and the 50 by 10% right there. And I want price to be within 3% of the 17 moving average. Now this just gets you a scan. You still have to follow price. You still have to recognize and understand chart patterns before you can trade these, I believe. Are there any questions there? Any questions at all? Whoops, I gotta go take a peek at Apple. I've been waiting for Apple to pop up. Take a look at Apple. Here we are, moving up there. So we're gonna watch that. Okay. All right. Okay, so if there are no questions about these, I think we ought to build a scan, and it's another way for me to show off this other alert that Ed built. Now I'm going to put this up here. What's our time looking like? Oh, we have plenty of time, don't we? We're going to move that up there. Move that over. There we go. Okay, so The next scan that I want to build is one that I get asked an awful lot for, and this is just a good place to do it. So we're going to do that. And what I'm going to do is we're going to build this right from scratch. Okay, right from scratch. So what we want to do is go to the main application, and we're going to start with a new canvas. All right. And what we're going to build is a trending chart that gives us a 3/8 trap. And we're going to be using a different kind of a trend. And again, this is something that Ed built. I have to reach out. John Jay in the Hit and Run Candlesticks room gave me the idea on this. I mean, so I probably have to give him all the credit. He gave me the idea of this, and then I remember we were working on this, and I couldn't wait for the market to close, and I quickly got on a Skype call with Ed, and I said, Ed, can you do this for me? And he did, and I love the way it's working out. So I really like this. Okay, so let's first of all let's name this. Okay, let's do that first. We're gonna so I'm gonna name, well, I'm gonna name it test 3/8 trap. Okay, so we're gonna do that. Now what we're gonna do is we're gonna go get the 3/8. Whoops. We're gonna go get the 3/8 trap. And what you do is you come down to the plus sign here and just type in trap. I just know that that's a keyword. I also know that it's all the way at the bottom. I've just done it so much. There's a lot of other fancy stuff you can do here, but if we're going to make our own, we're going to use, we'll use a trap this candle today. So we're going to do that, trap this candle. So now what we need to do is come over here and we need to say, well, what trap do we want? Because it is user defined. And so we're going to tell it that. It automatically comes up the exponential close 3, exponential close 8. Trap being the 3 and the 8. The only thing I'm going to change on this is I'm going to change the close to the high of the 3. Okay, that's the only thing I'm going to change right there. I like to use the high, so that's where I'm going to put it. If you would rather use the close, there's nothing wrong with that. I just choose the high. We're going to come over here to scan parameters, and we're going to rescan it to make it true. And now we've got something cooking here. There's 1,238 possibilities on this. I see mine is set here to all charts in LTA. We'll adjust that later. We'll see what this one looks like with this. Probably going to be too many for me. The next thing we're going to do is we're going to put the volatility stop in there. All right. Let's see here. I always hit that. This. Let me see if I get this right. Nope. It's X, then percent maybe. There it is. If you type in X and percent, or you can type bull V stop, whichever works for you. So I'm going to pick the bull V stop right here within X percent right there. Now we're going to come over here and we're going to adjust this up. And it comes out of the box with the V stop settings, 10, 1.5, and it comes out of the box with 4%. So your price has to be within 4% of the daily V stop. I'm okay. I'm going to leave mine like that. Now you can certainly adjust it, but let's just keep this one for now. Okay, we'll just keep this one for now. Now that brought us down to 602. Remember, we're using the all LTA stocks up here. That brought us down to 602. Now what we're going to do is, I'm actually going to go look. I can never remember the name of this. Rising. Okay. I don't know why. It seems like I should be able to. We're going to click on that plus sign again, and now we're going to type in rising. just like that. And see where it says rising average right there? We're going to left click on rising average, and we're going to come over here and set the parameters up a little bit. And we're actually going to use multiple. We're going to use multiple of these. I haven't decided how many yet, so we'll figure it out though. Okay, so it comes out of the box exponential close 17, and the length of increase 10. So I'm going to change this to the simple. Let's come in here and plug the 50 in there. All right, and I want this, for fun, let's just say 50 days. And let's rescan it. And one of my goals is to bring this number down to a more manageable number. A more manageable number. And there's a happy medium between good charts and a manageable number. And right now, that might be a little bit high for me. But so far, this is going to give me a 50 period moving average that's trending, okay? Now let's come in here. We're going to add another one of these, plus sign, rising. And since we talk about the 34 EMA all the time, let's go ahead and do that. So rising, let's change this to exponential, and change that to 34. And let's just see what this gives us right here. Let's rescan. That brings us down to 31 possibilities. Now, I think that's a little low, so I'm actually going to make a couple adjustments here. I'm going to take this down to 20 days, and let's see what this does right here. Gives us 85. Now we're in my neck of the woods. That's a pretty good number to me right there. So now, what if we wanted to only see stocks in a 3/8 trap that had green bars or white bars, open bars, bullish bars? So let's come over to the plus sign, and I do that every time. Let's just type WH, and you'll see white candle. Let's just click on that right there. And now we're going to here we go. We're gonna, well, it already rescanned it. Now we're down to 25 charts, okay? I've got this set on 15 minutes. We're gonna leave it there for now. We're gonna leave it there for now. So what I'm gonna do now is I'm going to create new window. Just created a new window. I'm going to close this, and I'm going to drag over that window. Now, while this is thinking about it, while this is making the pie, what we're going to do is clean this up. For those that don't know how to do this, right click, come down to style, left click on style, and take that check mark off right here. I like to change mine to 15. I say it so you guys can see it better, but my eyes aren't the best anymore, so really it's probably that I can see it better. We're going to change this color. I just happen to like the aqua, so I'm going to change that to aqua. I like the alternate colors, row colors. Well, we'll check that. And then I just like a black background, just like that. We're going to click OK, and that changes everything there. So you guys are probably wondering, you know, the bullish candle, the white candle, why am I getting these red arrows down? All right. Well, let's go take a look at one. It's actually not, is it? Oops, let's make this stay on top. For those that don't know, you can make this stay on top. Just right click and click stay on top, and it will stay there now while we click on the chart. So remember, I had this check marked 15-minute bar, or 15 minute right here. I had that check mark, so that's why we're getting red arrows. Is because it is a white candle, but it's giving us a 15-minute pullback, and we are in the trap, and we are trending. Let's take a look at MX. Here we are. Now that's not a white bar. Okay, we'll work on that. Here's our, and you know what? Let me put up the 34 EMA here. There we go. So we've asked the 50-period moving average to be trending. We've asked the 34 to be trending, and we've asked for a 3/8 trap. That is a 3/8 trap. Now I will check with Ed. Looks like there's something on this one that's not exactly right. Should be a white bar. I just saw TW show up, so I'm going to type in TW. There we go. 3/8 trap. We've got our moving averages trending here. Okay. Let's look at IRM. There's IRM. Here we're just barely over the T line there. That makes that a 3/8 trap, and here we are trending. Okay. So this is a good time for some questions. Anybody? You're right, John. Could have been a white candle 15 minutes ago. You're absolutely right. Let's see, Val. I always get confused. If set parameters to daily chart at the top, then 15-minute at the bottom. Well, that means what we're looking for, Val, is you're looking for your scans to scan the 15 or the daily chart. Everything up here is going to be based on the daily chart. This gives you alert on the 15-minute chart. Okay. This gives you on the 15-minute chart. So while this says, okay, we'll see a white candle, but if we have this marked to a new low, that's a new low of the 15-minute bar, or a new high, that's of the 15-minute bar. Now, if you want to change this to daily, you certainly can. There's nothing wrong with that. Nothing wrong with that at all. I just saw HCI pop up. HCI. Get HCI there. Now, you know, not every chart is going to be a chart that you should buy, because this just gives you a chart in that neighborhood. You need to pick out, is the chart worthwhile buying, okay? And then let's see here. I think I got some more questions I better get to. Let's see. Yan, I'm sorry if I pronounced that wrong. Hello, sorry I missed most of the session, as Tuesday already in my place in Malaysia. Glad to have you here a day ahead of us. Hey, by the way, since you're a day ahead of us, would you mind just telling us what the spy is going to do tomorrow so we know, and we'll take appropriate action there. Let's see. Roger, can you give the parameters of both the rising averages again? Sure. And look, I'm even going to change this a little bit, okay, to have some fun with it. So I just chose the 50. I just chose the 50. If you want the 50 to be, say, for the last 15 days, you can do that. So simple, close. What period of moving average do you want it to be reading, and what length? Let's change that to 15, okay? Let's come down to this one here, and I have the 34 on there. So let's do this. Let's change this to, here's one thing about the exponential move average that will cause you problems with this scan, all right? And that is any exponential moving average doesn't move in a perfect straight line. It's zigzaggy a little bit because it reads price at the front end, where a simple, you're taking more of the line. You're taking more of this part right here, where an exponential, you're taking more of this part. So when you think about it, I wonder if it might be better to use the simple in this case. So how about we change this to simple? And let's go ahead and leave the 34 there. Let's I mean, it doesn't matter. We're just looking for another moving average to be showing that we're moving up. And let's change this to 15 days, just like we did to the 50 here. Now, we're going to have to, let's rescan all here and see what we come up with. And it might or might not change the total number. There's 65. I think that went up a little. So let's just keep it there for right now. So we're going to click OK. And also, I'll have to go look at the volume stop and show you how that stayed up. Let's just jump on AOS real quick. Here's AOS. Okay, right in here. Here's your 3/8 trap. Are the moving averages working? Let's go over here to the volatility stop. There's your volatility stop. I got to tell you, there is not, in my opinion, there is not a better way to scan for stocks than that right there. There's just not. Let's look at HRC, which that's bullish. HRC. Whoop, how did I get to there? There we go. Oh, yeah. I'm at the volatility stop. So here's the volatility stop. Here's your 3/8 chart. And let me, so that we're all equal here, let me put that 50 up. This is a different chart than the other one we were on. What is this? We'll change this to the 34 and make that orange, and we'll turn that on. I could have sworn I made that orange, but we'll do it different. There we go. Let's make that so it matches. There we are. And let's get rid of this because I just don't like to see it. No one needs that top line trap. Nobody needs to see that. That's just confusion on the chart, if you ask me. So here's our trend. We're moving up. We pull back. We're above the V stop. We're in the 3/8 trap right now. I'm seeing a lot more red than I am seeing green. That should tell you something, actually. All right. I just thought I saw. Well, let's go look at Jeff there. Let's look at Jeff. And we'll go look at some red ones too. We'll see what they do. Let's get rid of all that. Here's Jeff. 3/8 trap. There's the volatility stop. We know that we're trending up. What if you want a faster trend? Like the 20. You can put the 20 up there trending. Nothing wrong at all. Everybody uses what they use. There's 3M right there. 3M. Look at that. Like I said, I honestly do not feel there is a better alert system than this right here. Okay? Let me answer some questions real quick. Roger, could you give the, okay, we just did that. What were the changes you made on the parameters to user-defined trap this candle? What were the changes? The trap with the high, that's the only thing I changed. My 3/8 trap is always the 3 exponential moving average, and it's the average of the highs, and it's always the 8 exponential moving average, and it's the average of the close. That's always my 3/8 trap right there. Let's see. Monica, what were the parameters of the 1750 short? Let's take a look at those. Write this down, Monica. Don't try to create the scan, okay? Because we're not going to keep it up that long. Go ahead and grab a piece of paper, full sheet of paper. Grab a pencil. Are you ready? User-defined trap this candle. Trap this candle. That's the keywords you want. And that is, we're going to use the 17 and the 50. We're going to use that, and on those are going to be the exponential 17 and the simple 50. That's the trap. We're going to spread the 17 and 50 out by 10%. I want it near the 17 exponential within 3%. Okay. Peter, I'll tell you mine, but then you tell me yours, okay? I'm in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 positions. Oh, you're welcome, Monica. Thanks, Chris. Any questions? Let's take a look. I just saw, and by the way, say you don't. Well, let's look at some red ones first, okay? So all the red one, and I'm going to go back to this chart. There we are. You see the red arrows? All that means is it's falling out of the trap below. It's falling below the T-line. That's all that means. And is all that means. So what if you didn't want to see those? You're only interested in a 3/8 trap long, and that's too noisy for you? Watch this. Simply go into properties and get rid of the new low. I don't want to see the lows anymore. So don't show them to me. They're of no interest. I'm not going to trade them. So I don't want to see them. And then we'll click OK. We'll let this kind of cook here for a second. Hi, Leonardo. Yes, this is being recorded. So now let's go take a look at OMC. Look at that. Beautiful chart. We're trending here. We've got a nice pullback. You've got a nice flag. Now, you as a trader, I'm sorry, but you're going to have to make some decisions on your own. And that decision is, do you buy it here or buy it when it breaks out? Or maybe you don't buy it at all. Maybe you don't buy it at all. How about Fox A? Look at that. I could go down the list one right after another. Right after another. There is just not a scanning system better than this. None. And I challenge anyone to show me one that's better. I challenge you. MU. Look at MU. Is that a trade for somebody? Could be for somebody, could not be for somebody. Okay? What else? 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 For whatever it's worth, I bought some QS this Friday. It's working out awfully nice here. One of those 3/8 trap plays. Up 14.25% right now. I'm doing real well. Real happy with that. Real happy. Bruce, this morning's pick, PFE and LI, were these off the scanner? Yes, Bruce, but not necessarily today. All right. Now, PFI, I have that on a watch list. So if I have that on a 3/8 trap watch list that is a very specific watch list. And when it started to trigger new highs, then it came on there, yes. Now, this chart would not show up on this 3/8 trap because we've asked for a trend over here. This has no trend. Other than, could we set one up like that? Why couldn't we? Why couldn't we? You just have to use a different moving average or a faster moving average for a trend. And as far as LI goes, LI was also on a watch list I have. I emailed my watch list out to everybody last week, I believe it was, or maybe it was the week before. And it's just, watch list with a lot of electric cars, the battery stuff, 5G, a few things like that. So yes, absolutely it was. I see banks are pulling back a little bit. Now, you may not want to short a bank. I'm not suggesting that's what you should do. But let's for a minute, let's forget about what you think about the market. Let's forget about you think banks go higher maybe. Let's just look at the chart. Honestly, look at the chart. Do you see this going lower based on the chart? I would hope so. I would hope so. So, and all I'm trying to point out is the scan doesn't lie. The scan does not lie. There are some charts that look better than others. That's for sure. There's no doubt about that. Whoops, 1, 2, 3. 3M. Is that a 3/8 trap buy for somebody? Or an add to for somebody? Could be. Seco, you might want to check your junk box. Your spam folder, something like that. For instance, right here, here's my hot list, and there's PFE popping up right here, which that's just a hot list with a handful of stocks on it. But those are the kind of things that I look for right there. Any questions about these scans? Any questions about these scans at all? If somebody was to ask me, Rick, what would be the very best scan? What scan would you give your children? It would be, for the long side, it would be this one right here. There's no question in my mind. This would be it right here. No question. I might play a little bit with the rising part of this. I might play with that a little bit more, but I think that does absolutely fine right in there. But this would be the scan I would use right there. Hey, Peter, this is a good time for me to ask you, how is this information going to help you as a trader, Peter? And I don't mind telling you. I'm just always curious on how that kind of information helps you. For the purpose of the recording, Peter's asking on average, how long do you hold a position? 1, 3, 5 days. And while Peter is I know he's typing, right, Peter? Because I'm going to answer you, and it's like a favor give back, okay? So I'm going to give you the favor, and I'm going to share with you exactly, and then I want you to give the favor back, all right? And I'm going to tell you exactly what I do, right to the penny. I'm going to tell you what I do. But I want to also share with you, that's one of those questions that will do you no good whatsoever. Just sharing that with you. Questions should be asked about charts. That's where your money is, not how many positions or how long do you hold them. That doesn't have any value to it. None. Just sharing with you this, okay? I've been doing this an awfully long time, and I know what works and what doesn't work. Believe me, I do know that. But now let me get to your answer, okay? Let me get to your answer. So I'm in QS, okay? Now, my goal every year is to double my account. I don't know what your goal is, but mine is to double my account. So say my account has $30,000 in it. And by the way, I don't care what that number is. My goal would be to double it. So that means we want $60,000. Oh, by the way, I want to double it in 12 months. Okay, 12 months. Now, I happen to know that there's about 243 days to trade in 12 months. So let's just do the math here. What is it? So I need to make $30,000, right? $30,000, divide that by 243. That gives us, what, 123? Let's just call it $125 average a day. Okay, here, I'm going to write that down. I better write that down, or otherwise I'm going to get myself sideways here. So $125 a day, or how about $625 a week? That's all I need to do. Double my plan. Double my plan to. It's all I need for my plan to work. How's that? Okay. So, knowing this information, $125 a day, or $625 a week. Now, there are some days that I don't make that, but I sure work my tail off to make that $625. Knowing this piece of information, let's take a look at QS. I bought this Friday. Yeah, I bought this Friday. And already, well, another $75, and I will have made my week's worth of goals. So here's what I do. It's got nothing to do with targets for me. It has absolutely nothing to do with targets for me. It has nothing to do with the amount of days I hold it. Has nothing to do with anything like that. All it has to do with me is making my goal. So, knowing this information that I have just shared with you, I'm likely to take some of this off the table because I've made my goal. Now, before anybody says, why don't you let it go and put your trail it with a stop? Look, I put my legs on, my pants on. I think I'm doing this right now with my right leg first. Why? Because I want to. You know, it's not a matter of a right or wrong. It's a matter of what works for you. Because I want to. So for everyone that just go ahead and stop typing, why don't you trail it? I don't do that. Simple. I don't do that. Now, I will say, this is something that I do, that I will get down to the last little bit of this, and it may be up here. It may be up here. And that's where that last little bit, I might trail it with a stop. But I don't chase it up. I don't do that. And at some point, it gets up far enough, I don't even keep it. I just sell it. All right? So, well, Peter, it's on the recording, okay? So we're not going to repeat any of it, but it will be on the recording. So, that is exactly what I look at. And believe me, Peter, when I tell you, all your questions really need to be about the chart. And I'm giving you some free guidance here, okay? I'm trying to help you. Now, all that other stuff doesn't mean anything. For instance, what if I told you in my account I manage 30 positions? Your head would explode. So would mine too. So, but that doesn't mean that you are going to do that. What if I told you in my account I manage one position at a time? You would say, well, that's ridiculous. But that's what I want to do. Peter should manage the amount of positions Peter can manage. Not what Rick can manage. Not what Malcolm can manage. What Peter can manage. Okay? This is important in trading. This is truly, truly important. It's not you're not trading against me, or I'm going to use Malcolm. You're not trading against Malcolm. You are trading against Peter. You're not even trading against the market. You're trading against yourself. And when you're looking at trades, it's not about the market says this is a target. I mean, and the market does say this. There's the high, that's standard. The market says that's the target. Who cares? Who cares? Because I would venture to say most traders, not successful traders. There's a difference between Well, everyone knows that. There's a huge difference between successful traders and traders trying to be successful. Let's talk about the traders that are trying to be successful. Traders trying to be successful, what they do is they put a target up here, and that's what they stare at. And what happens is price will move up, and then price will move down, and they're thinking, what the hell happened? Why didn't I make any money? The truth is you had an opportunity to make money, but you didn't because you were focused on some line that's on the chart, okay? So you're only trading against yourself. That's all. No one else. Anyway, wrap all that up and try to make something there yours, okay? And thank you, by the way. Thanks for allowing me to do this, okay? Hi, Ed. Maybe a better question would be what % of your entire account is at risk at any time? At any time, and when do you determine how many positions are overall position risk? Thank you. Okay, now, Ed, that is you asked the same exact thing in a different way. But let me ask the group here, okay? Let me ask the group a question. Do you think that somebody that is let's draw a little face here, that is not successful should trade the same amount of positions or put the same amount of money at risk as somebody that is successful? You got it, Val. Absolutely not. Absolutely not. All right. So here's my problem. Over the years, I've been asked that, and I've told everybody right away. And I'm going to tell you too here. But I've gotten to where that has been a huge mistake on my part. That's my bad. Because it's not fair. Somebody that is struggling, now I feel like we should give them arms and legs, don't you? Somebody that's struggling cannot trade the same as somebody that's successful. You can't do it. Somebody here, maybe all they can handle is 5 accounts, where I've got 11 on currently. Maybe somebody here should only invest 2 to 3% of your account because you do not have a proven track record. But what if I told you that in some cases I trade 10% of my account? So is it fair that I share this with this guy here? Is it fair to this guy? No, it is not fair. That actually sets this guy up for total disaster. Total disaster. So this is where each person's got to decide, what can you afford to risk? And you risk what you can afford. That's it. No more, no less. You also have to consider, do you have a pretty good batting average? Or does your batting average, well, just kind of stink? And I'm not going to lie, and I'm not going to candy coat it. But does your batting average just flat stink? Well, you might want to stay very small until your batting average, well, smells better. And then as you become a better trader, you can move up the ladder a little bit. Maybe you can trade more positions. Maybe you can get a little more creative over here. And I know, I love this one. You know, somebody says, well, geez, I only have $3,000 in my account. If I put 2 to 3% in a position, I'll never make any money. Oh my God. Learn to grow your account first. By the way, this person just started trading 3 months ago. right? And all of a sudden, they want to trade mammothly. You can't do that. You can't do that. Anyway, we totally got off topic here. And all right, one more thing, and then we need to get off this topic. And any other questions on the scanner, and then I'll get out of here. You guys all know, you've heard stories of what, 90% of all traders fail. 90%. Do you know why this is? Does anyone know why? Anybody? 'Cause I'm going to tell you. If you don't know why, I'm going to tell you. Okay, I'm going to tell you now. The answer is nobody wants to take the time for the education. Nobody wants to. Everybody wants to just get out there and trade and make money today. You wake up one day, a week ago, you said, you know, I'm going to be a stock trader. I want to do this. This looks so easy. This is easy peasy. So you go out, and you open up a brokerage account. You download a couple of tools. You put money in your brokerage account, and zippity doo dah day, you're off. This is why 90% people fail. They don't want to take the time to learn. Stock trading is not a lottery ticket. It is not. It's a job. And it's a hard job. It really is. It's the most rewarding job you'll ever have in your life, in my opinion. But you're going to have to earn it. You can't go out there and just do it. It's like lottery tickets. Somebody who wins a lottery ticket, did you earn it? Well, maybe. You got off your lazy ass and you drove down to the local 7-Eleven and you bought a lottery ticket and you won. So yeah, I guess you earned it. So take the time to put the education in. And by the way, the best way you can do education is to stop trading until you learn how to trade. In other words, don't trade with your hard-earned money right away. Learn how to trade. Okay, sorry, you got me going on this subject. This is a subject that is just near and dear to my heart because I have failed a couple of times. And one of the things is I kept trying to trade. And then I get out. Last thing, and then I'm going to get out of here. Do you guys know I did? I've blown my account up twice, a lot of years ago. Believe me, a lot of years ago. And the second time, I couldn't bail myself out of this one. You know, it's like, okay, I've spent enough money. I've put enough money in the trading account. I can't do this. So what I did is I sat down, and it took me about 4 months, 3 to 4 months. 3 to 4 months. No trades. And I went through charts. I flipped charts. I studied. I flipped charts again. I looked at charts. That's what flipping charts is. You look at charts. You study charts with no trades whatsoever. And that's how, and that's when I came up with the T-line. Then I just followed the T-line for a couple weeks maybe, because I'd kind of been following it. But then I just started trading with the T-line practice. And then I started trading with the T-line for real. And that was the biggest turnaround of my life. And it was after about 4 months of just doing this. And yes, and this is one of the reasons why I think people are determined to trade. That was while, yes, I paid for TC2000. And yes, I paid for a scanner like the one we showed you here, not this one, but another one. Yes, while I paid for that. Yes, while I paid brokerage fees. So every month I had a cost. There was the cost of education. I wasn't concerned about getting my money back. That was the cost of education for me. But it took me, after tons of failure and about 4 months of no trading, just studying, what I would do is just simply look at charts. I would just follow charts. What's this chart doing? What made this chart? And by the way, I didn't focus here. I focused over here. And I didn't focus on this. I focused on things like this right here, like that move. What made that work? What made that work? What made that work? Like I said, I did not focus on that. That's too much. And I did not focus on this because I wasn't trading. This doesn't tell you anything if you can't explain this. So, anyway, there we go. I think I've outstayed my welcome here. Oh, anyway, you guys give the scan a shot. Anybody got the 14-day trial? I know that Malcolm, anybody that has the 14-day trial. Look, there's a 14 free-day trial to this. Get this scan set up. While the market is long, don't worry about this one. Just use this one right here. All right? Just give this one a shot. Just try it for 14 days. It's free. The scanner's free. And let's just see if you make some money. See if it makes some sense to you. See if you can look at Fox A and make a trade there, or CCRN, make a trade there. Dish, make a trade there. And not all charts are the same. Just because they show up here doesn't mean they're an actual trade. They're just in your neighborhood. Now you've got to decide on the chart. All right, one last thing, and I'm seriously out of here. I forgot to mention, did you know that if you only want to trade charts from say $1 to $30, you can set it up right here. Whoops, $30. You can set it up right there from $1 to $30. And it'll only look for charts between those prices. You can also set it up here in the alerts, but I'll let Ed share that with you because I'm checking out of here. I use LTA. Do we need to have TC2000? No, you do not need to have TC2000. No, absolutely not. Yes, the T line is the 8 EMA. Guys, I'm going to check out of here. I'm going to get this recording recorded, and stay here if you have questions. Ed he's right here right now. In fact, I'm going to go ahead and drop my screen.